This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global record high natural gas prices are pushing some energy-intensive companies to curtail production in a trend that is adding to disruptions to global supply chains in some sectors such as food and could result in higher costs being passed on to their customers. Some companies, including steel producers, fertilizer manufacturers and glassmakers, have had to suspend or reduce production in Europe and Asia as a result of spiking energy prices. That includes two of the world's largest fertilizer makers, which said they would cut production in Europe. The UK on Tuesday said it agreed to provide state support to one of the companies to restart production of byproduct carbon dioxide, which is used in food production, to avert a supply crunch.
China's pledge to stop building coal-fired power plants overseas could cull $50 billion of investment as it slashes future carbon emissions, analysts said, although Beijing's own domestic coal program is still propping up the dirty fossil fuel. Chinese President Xi Jinping said in a pre-recorded address at the United Nations General Assembly on Tuesday that China would help developing countries build green energy production and halt construction of coal power plants abroad. China has been under international pressure to announce an end to overseas coal financing as part of its updated package of national climate pledges to be submitted to the United Nations.
Moving on to the top news in the energy sector.
Top state refiners Sinopec Corp., PetroChina and leading private chemical giants like Hengli Petrochemical and Zhejiang Petrochemical Corp. Are set to join the country's first state oil reserve auction on Friday, company and trading sources said. China, the world's second-largest oil consumer, is set to auction for the first time state crude oil reserve on Friday in an attempt to test a new mechanism to manage its large emergency stockpile and tame domestic inflation. A total of 7.4 million barrels of crude stored in bonded tanks in northeast China's Dalian port is up for grabs. The grades include Abu Dhabi's Murban and Upper Zakum, Qatar Marine, Oman crude and Forties blend from the North Sea.
The White House is backing a plan by House of Representatives Democrats to let renewable energy firms form tax-advantaged partnerships that the oil and gas industry has used for decades to build out the U.S. pipeline and storage infrastructure, according to three people familiar with the matter. The expansion would allow the renewable energy industry, from wind and solar to biofuels like ethanol, to form master limited partnerships, known as MLPs, that combine the funding advantages of corporations with the tax advantages of partnerships. The sources, speaking on condition of anonymity, confirmed White House support for the plan. Next, we have the top news in metal markets. Gold prices steadied on Wednesday as investors braced for the outcome of a U.S. Federal Reserve meeting and Chief Jerome Powell's remarks on reducing its massive support for the pandemic-hit economy. Spot gold was little changed at $1,773.81 per ounce by 11:10 GMT, while U.S. gold futures fell 0.2% to $1,774.90. The markets are already pricing in an increasingly hawkish outcome, and the nuances will be in Powell's press conference, StoneX analyst Rona O'Connell said, adding gold is also seeing some safe haven risk hedging on the back of Evergrande.
Copper prices shot up 3% on Wednesday on relief that China's debt-burdened Evergrande would pay interest on a domestic bond, easing fears that the property giant's troubles might hit the global economy. 3-month copper on the London Metal Exchange climbed 3% to $9,245 a ton in official trading, reversing losses from the previous session when the contract went as low as $8,810 a ton, its weakest since August 19. An Evergrande unit said it would make a bond interest payment on September 23 after private negotiations with bondholders.
We will now look at the top news in the agricultural sector.
Indonesia will use existing laws in a jobs creation bill passed last year to deal with issues around sustainable palm oil production, a senior official said on Wednesday, after a moratorium on new plantation permits recently ended. The Southeast Asian country, the world's top palm oil producer, launched the moratorium in September 2018 to try to stop deforestation and improve governance in the industry, while seeking to boost output from existing cultivated areas. The moratorium ended on September 19 with no indication of an extension, raising concerns by environmentalists who say that Indonesia is at risk of losing further large tracts of forest to plantation expansion.
Finally, we have the most recent news on the financial market. China Evergrande agreed to settle interest payments on a domestic bond on Wednesday, while the Chinese central bank injected cash into the banking system, soothing fears of imminent contagion from the debt-laden property developer. Evergrande, Asia's biggest junk bond issuer, is so entangled with China's broader economy that its fate has kept global stock and bond markets on tenterhooks as late debt payments could trigger so-called cross defaults. Many financial institutions have exposure to Evergrande through direct loans and indirect holdings, while any defaults will also trigger sell-offs in the high-yield credit market.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.